Hello and welcome to this video. In this video, we are going to do a question from variant 31, October-November 2018, Section A, Question 1, based on the topic of clubs and societies. The question gives us the information about a sports club which was set up several years ago and its membership has increased each year. Annual membership for the year ended 31st December 2017 was $120 per member. A summary of receipt and payment account for the year ended 31st December 2017 is given here. The receipt side will be the debit side and the payment side will be the credit side. The balance brought down, which will be the previous bank account balance which have been brought down for this period. Then we have membership subscription, which will be an receipt, and we have the entry receipt for marathon, sales of sportswear, donation, and all these which we have received in our bank account have been mentioned on the debit side of the receipt and payment account. And on the credit side we have the marathon price and cost, wages, rent of club, house purchases of sportswear, club overheads, repairs and maintenance. All these are the payments which are mentioned on the credit side. If we total up the credit side, it will be 26,400. If we total up the debit side, it will be 26,300. That means this 100 will be the overdraft for this year, which will be brought down next year. The receipt and payment account is similar to the cash book and it helps in making the final account. So, in the A bit of the question, we are asked to give one use of receipt and payment account. As I have mentioned earlier, receipt and payment account is a summary of all the cash transactions for the period of time, which is similar to cash book, and it gives the opening and the closing balance of your bank account, and it helps in preparing the financial statement. With this, we end the A bit of this question. So let's read the adjustments given here in the form of additional information and do the working alongside. The first bit of the additional information states that member subscription in arrears and in advance. Here it is the beginning balance and the end balance of both the subscription in advance and in arrears are given. Subscription is the membership fees, which is the revenue which a club or a society earns. And with this information which is given here, we can make a subscription account. Subscription is a nominal account. The rules are same, that is, debit all the expenses and losses, credit all the incomes and gains. To keep this account simple, we take in the subscription account, on the credit side, we take everything which belongs to this period, that is from 1st of Jan to 31st December 2017. Whatever was the subscription belonging to this period, all will be credited. Rest will be debited and balanced with the help of income and expense account. So, if we see here it is stated that membership subscription in arrears, that means it was due and has not been paid, and it was on 1st January 2017. This was 840. That means this arrears was for the period of 2016, and hence on the 1st of January this balance was brought forward because still it is pending for the period of 2016. It's not for the period for which we are making the subscription account, hence this amount will be debited. Owing brought down 840. If you see here, it is 1,440. Again, these are arrears which are on 31st December 2017. That means this is still due for the year 2017 and it belongs to this period. So we are going to credit it here. Owing carried down 1,440, which is on the credit side of subscription account. And if we see here, then the next entry which is given is subscription. Here is paid in advance. on 1st January, this was the amount which was paid in advance. So that means last year the members have paid 480 advance for the period of 1st January 2017 till 31st December 2017. So this is paid for the period for which we are making the subscription account. Hence, what we are going to do, we are going to take this value and credit it, because this is the subscription which belong to the period for which we are making the subscription account. And if you see here, it's 240, which is on 31st December 2017, which is again paid in advance. So for which period they have paid in advance? They have paid this value 240 in advance for the coming period, that is the period after 1st of January 2018. And we are not making the account for 2018, we are making for 2017. Hence this amount we are going to debit it here, saying prepared 240 on the debit side. If you remember from the receipts and payment account, there was a subscription given there which was debited there, and here we are going to credit it, saying receipts and payment account 21,000, that is which we have received in our bank account for this period. So once we know all the amount which we have received from the credit side, we will total it and we'll get the value of 22,920. And from this we are going to subtract 840 and 240. We get the balancing figure as 21,840, which was the required subscription which we have received for this year, this period, that is from 1st January 2017 to 31st December 2017. So this balancing figure, we are going to take it to our income and expense account. We are debiting it here, and in income and expense account it will be credited as a subscription for the given period. With this we complete the subscription account. Further, in the second bit, we are given other assets and liabilities. The opening and the closing balance of these assets and liabilities are also stated. So if you see, we have inventory of sportswear, gym equipments, wages owing, and rent paid in advance. With this we are going to do further working, and in our working notes we are going to start it from the wages owing. So I have taken here the wages which was paid during the year, and this was stated in the receipts and the payment account, that is 7,900. And to this I'm going to check what is given in this additional information. Here it is stated that the wages is owing $700 on 1st January 2017. It means that this wages was due in 2016 and still it is pending. It has not been paid. So as it doesn't belong to the period of 2017, I'm going to subtract it. And in the end, that is on 31st December 2017, the $800 was the owing, which means the wages which was due for the period of 2017 has not yet been paid. And as we are doing the calculation for the period of 1st January 2017 to 31st December 2017, this will be included and we are going to add it up, and then we'll get the total wages. Total wages for the year, which we are going to mention in the income and expense account, will be $8,000. And the owing, which was on 31st December 2017, will be taken as current liability in the statement of financial position. Then next we will take the rent. Rent paid again from the receipts and payment account was $4,800. To this we are going to check this. What is mentioned here is rent paid in advance, that is the rent which was paid beforehand. On 1st January 2017, the balance was 1,200. That means this was paid in 2016 for the period of 2017. And as we are doing the calculation for 2017, this we are going to add it up, which I did here. And then again on 31st December 2017, the rent which was paid in advance. So for which period it will be paid? That is, it was paid beforehand for the period of 2018 and it doesn't belong to the period of 2017. Hence I have subtracted it, and we are going to take 4,600 in our income and expense account, and this 1,400 which was paid in advance will be our current assets in the statement of financial position. Then Apart from that, what else is given? Inventory is given. Sometimes the clubs and society take up additional activity. Apart from the earning which they get from subscription, they need more funds, and for this they take up additional events or sell additional products so that they can earn more revenue. And for this products, we usually make the trading account and calculate the profit from trading. So we are going to make a trading account for the inventory of the sportswear. That is, we are going to make a trading account for the sportswear. So how do we make the trading account? We always start with sales revenue, which is again given in the income and it is again given in the receipts and payment account. So we are going to take the value from the receipts and payment account, and from this we subtract the cost of sales. Cost of sales, we have a formula, that is opening stock of inventory plus purchases minus closing stock of inventory. We get the cost of sales, which I did it here. Purchases value, again I have taken it from the receipts and payment account. So once I subtract the cost of sales from the sales, I got the profit for the club and society as $240, and this $240 will be again transferred to income and expenditure account. Next, in the third bit, it is stated that the gym equipment is depreciated using the reducing balance method at 20% per annum. At 31st December 2017, the gym equipment was 2 years old. So if we see in the second bit, they have given us the equipment at cost as $15,625. So we are going to take this and we are going to depreciate it on the basis of reducing balance method. So for this, let's depreciate it for the first year, that is for 2016. If we take 20% of $15,625, we get $3,125 as depreciation for 2016. And we'll get, after subtracting, we'll get the net book value, and from this net book value again we are going to find the 20% so that we can get the depreciation which was due for 2017, for which we are going to make the income and expense account. So if we take 20% of 12,500, it will be $2,500, and this will be the depreciation for the year, and the net book value which we are going to write it in the statement of financial position will be $10,000. Next, in the fourth bit, what is given is that all the donations are capitalized. In clubs and societies, there are three different ways in which we deal with the donation. If the donation is very small, we take it as a revenue income. If the donation is given for a specific purpose, like to buy a specific equipment or to build a specific requirement for club, like a specific ground or a specific pitch, then we open up a bank account for the specific reason and we credit the whole amount to that bank account and use it for the specific requirements. Or sometimes the donations are capitalized, as it is mentioned here, and if the donations are capitalized, we add it to the accumulated funds in our statement of financial position. In the B bit of the question, we are asked to make the income and expenditure account for the year ended 31st December 2017. So let's make the income and expenditure account for the year ended 31st December 2017. For this, we will start with the subscription which we have calculated in the first working note, and then next we are going to write the marathon profit. I told you previously that sometimes clubs and society take up additional activities to raise revenue. So in this, the club have taken up an additional event as marathon, and for this we are going to calculate the profit. How we are going to do it? We are going to take the value which is given in the receipts and payment account as entry receipts for marathon, which will be the revenue for marathon, $2,500, and from there we are going to subtract the payment side, which was mentioned that marathon price and cost in the receipt and payment account was $80. Once we subtract, we get the profit from marathon as $2,420. And then profit on the sales of sports equipment, which we have calculated in the second working notes, and when we add all this will be the income for the club for the period of 1st January 2017 to 31st December 2017. From this we are going to subtract all the expenditures, the rent which we have calculated in the second working note, wages again in the second working notes, repairs and maintenance which was mentioned in the receipts and payment account, clubs overhead which was mentioned in the receipt and payment account, depreciation which was calculated in the third working note, and once we total it up we subtract it from the income, and when we subtract the expenditure from the income we are getting a loss or a deficit as $3,480. With this, the income and expenditure account is completed. In the C-bit of the question, we are asked to prepare the statement of financial position. To make the statement of financial position, let's begin with making the statement of affairs for 31st December 2016 so that we can get the accumulated fund at 1st January 2017. So to do this, we will start with the non-current assets. Gym equipments for 2016, which we have calculated in the working note 3, will be the net book value for the gym equipment will be $12,500, which I have mentioned it here. Then current assets. In current assets, we are going to start with the bank balance, which is given in the receipts and the payments account. The balance which is brought forward will be the bank balance on 31st December 2016, and that is $1,250. Inventory of sportswear, which is given in the additional information bit 2. There the balance which is on the 1st January 2017 will be the balance which has been brought forward from 31st December 2016. So we are going to take all the opening balances here. So here the inventory which was given there was $635. Rent prepaid was $1,200, and subscription which was given in the first bit of the additional information on 1st January 2017, which was brought forward from 31st December 2016, was $840. So these are all your current assets. When we add up non-current assets and current assets, we get the total assets, and from this we will subtract the non-current liabilities and current liabilities. We don't have any non-current liabilities here, we just have current liabilities. That is subscription in advance, which was mentioned in this first bit, and this subscription was given as on 1st January 2017. So this was brought forward from December 2016, so that will be mentioned here, and same will be the case with the wages. Once we write both of them and add them and subtract it from the total assets, we get the accumulated fund at 1st January 2017, which we are going to use when we are making the statement for financial position at 31st December 2017. Now, as we have all the information, let's make the statement of financial position. So we will start with non-current assets. In this we will have the gym equipments, which we have calculated in the third working notes, that is $10,000. And then we have current assets, in which we have the inventory of the sportswear, which we bought it from the second additional information. Rent prepaid, again from the second additional information, the balances which were on 31st December 2017. And subscription in arrears, this was in the first additional information. Then we will total up all the assets, and the total of asset is $13,505. Then we will take all the liabilities. In this we will start with the accumulated funds, which we have calculated in the fifth working notes, and then to this we will add the donation which was given as the last bit in the additional information, and from there we will subtract the deficit which we got from the income and expenditure account. So after this we are going to take the this was the non-current liabilities. After this we are going to take the current liabilities. In current liabilities we have bank overdraft, which is mentioned in the receipts and the payment account as the end balance, and we have subscription in advance, which was mentioned in the first additional bit. Then wages in arrears, which was mentioned in the second additional information, and again we are going to take all the balances which was on 31st December 2017. Once we add all the liabilities, our assets and liabilities are equal. So with this we tally the statement of financial position, and this ends the C bit of our question. Additional information: the new treasurer of the club discovered the surplus for the previous year 31st December 2016 was $23,400. This includes a life membership of $19,000 which has been credited in full to the income and expenditure account. The treasurer has suggested that the life membership should be credited to income and expenditure over 5 years. In the debate, we are asked to explain why the new treasurer have suggested this. You see, whenever there is a huge expense or a huge income for which the benefit can be reaped over a period of time, the whole amount cannot be credited to one particular year. Like advertisement charge, preliminary expenses, these are the expenses for which the benefit will be reaped over a number of years, and hence the expense need to be divided over the number of years for which the benefit is reaped. In the same way, if there is an income for which we have to provide the facilities over a period of time, the income should be divided among the number of years for which the facility is provided. This is what is used when we follow the matching concept, and then based on this, the life membership should be spread over the years the member used the organization facility. So based on this concept, the treasurer may have suggested that the overall life membership should be divided for 5 years. Apart from that, there is also other concept which we need to follow, which is the prudence concept, which states that the profit should not the profit should not be accounted before it is earned. Here, the members may be using the facility for a huge number of periods. That is, they may be using it for a number of years. And when they are using it for a number of years, the profit doesn't belong to one particular year. Hence, we can't overstate our surplus based on prudence concept. Hence, the treasurer may have suggested that this have to be divided over 5 years. But as it is a life membership and he has said that it should be only 5 years, we can't judge why he has said only 5 years. It may be 10 years, 15 years, but the most practice which we plan or which we take up is 5 years. That is, we plan most of the organization goals based on 5-year plan, and most of the goals are usually planned based on the 5 years. Hence, he may have suggested 5 years as a period for which the life should be divided. With this, we finish. In the EBIT of the question, we are asked to calculate the impact on the surplus or deficit if the new treasurer's suggestion for the treatment of life membership had been adopted for the year ended 31st December 2017 and for the year ended 31st December 2016. 16 and 17 we have to calculate. So first we will start with the 31st December 2016. As in the debit, the surplus which was given is $23,400. So for this, in this, the total amount of life membership is also added, as we are going to divide this 19,000 over a period of 5 years. Hence, after subtracting it, we will find the share of 2016, which will be the 1/5 of $19,000, and we are going to write the life membership as $3,800 for 2016. And when we do that, we get the surplus for 2016 as $8,200. And when we do the same calculation for 31st December 2017, then as we have made the income and expenditure account, there we got the deficit for the year as $3,480. And to this, if we add the life membership subscription for this period, that is 1/5 of 19,000, that is $3,800, we get the revised surplus as $320. Instead of loss, now we are getting a surplus of $320. With this, we end the question. Thanks for watching my videos and have a blessed life.